Good morning, everyone, and welcome to the Shekel Brainweigh webinar. My name is Elodie Castagna from FTI Consulting, and with me today I have Barak Nir, the CFO of the Shekel Brainweigh, and Danny Nadji, who's a country manager for the company. Danny and Barak will give us an overview of the Shekel's latest activities for the half-year results, and then we'll open up to Q&A. If you have any questions that you would like to ask, you're more than welcome to write them in the box on the online chat, and we've received a few pre-submitted questions as well. So I'll now hand on to Barak and Danny, who will give you an overview of the company, and then we'll open up to Q&A.
Good morning, everyone. It's Danny. We're very happy to have the second webinar here from Perth. We're finishing an exciting week, and thank you for joining us for this webinar. We had quite a busy week. We started it with invitation to the ASX Small to Mid Cap conference last Thursday in Sydney, which was an excellent event, followed by meetings in Sydney and then in Melbourne, and we just finished it in Perth, visiting different industry and financial organizations. We had quite an exciting first half of the year with everybody being very busy on the business side. So we're very happy to publish the results and announce them today, as well as a major announcement from yesterday with a collaboration of the company with Hitachi. So with it, we'll go to the actual presentation. So just a quick overview and something that really happened in the last 6 months of the year, and to put kind of a bird's eye view on the business. Shekel Brainweigh today is a holding that basically sits on two separate businesses, if you will. One is Shekel Scales, the traditional business of Shekel, where we sell weighing technology to predominantly blue chip clients around the world, being GE Healthcare, Toshiba, Fujitsu, Diebold Nixdorf, and others. That business is continuing to have a nice demand, with the revenue finishing at $8.4 million US, with a nice growth profit of 3.82 million. So we saw an uplift of 20%, I think, on the gross profit side compared to the corresponding half year of last year. And we'll talk more about the activity of Shekel Scales. And on the right hand side, you really see the exciting new retail innovation division following 3 years of development. A group of developers actually in Tel Aviv, which now started commercialization, and the company decided to form a whole new division with its own budgets, its own CEO, and its own formed activity. So we're very happy about the formation of the division and the beginning of sales and delivery of especially the Innovendi this year. And we of course talk more about the retail innovation with its exciting products, and in particular the recent development with Hitachi. Again, just another view of the business to people who may join us for the first time. Shekel Brainweigh have listed on the Australian Stock Exchange in November 2018. The business now, it's a market cap of roughly $21 million, and with 139 million issued shares. It's led by Dave Sharma, who's our non-executive chairman. Dave, to people who know, is now a member of parliament and the previous ambassador of Australia in Israel. We're very happy to have him. And with him is really an exciting group of executives with a large experience. Yoram Ben Porat, who's the CEO and listed his first businesses, Nasdaq, as well as the others that you know. The new addition is Mr. Udi Weisner, who's just recruited as the CEO of the new retail division. And we're sure that Udi is going to be a great help. Maybe to put an overview of the first half of the year, and then a summary of the major development. There's definitely a continued strong profitable operation of Shekel Scales. We continue to see demand for the product across the board. The division finished with an $843,000 US positive EBITDA, with additional contribution of $763,000 to the R&D. So definitely a strong operation of Shekel scale. The exciting thing about the retail division is the major order of 1,200 machines from Tnuva, the Israeli CPG, that started delivery. About 50 machines were already delivered, and continuing delivery of roughly 15 machines a month. But what's more exciting is that the company received order from Europe and is looking to deliver them in the next coming months. Like I said, we formed a new division, which is the retail division. Now it's going to have its own budget and activity. That's a major change of the whole structure of the business. There are some exciting news on the development side. There's a major cooperation with Edgify, a company out of the UK, which we announced, as well as the development of a new product called Soter. Absolutely a market demand for such a product, and we're looking to exciting news in the following 6 months. We continue our collaboration with the industry bodies led by Intel, and we're very happy to advise that we opened our office in Sydney 2-3 weeks ago. So we are happy to welcome people who are looking to see more about the business. With it, we're going to move to a few of the financials, and Barak is going to take over.
Hi all, good morning, and thank you from my side on participating in this important event of ours. If we look at the highlights of the financials of the first half of the year, we can see revenues of 8.4 million, just about the same as last year. A loss of $2 million, which will be explained down below. And strong on cash, still have 5.1 million US in the bank. The left-hand side of what you see is the core traditional business. You can see that all revenues came from that core traditional business. Nice EBIT of $843,000 US dollars, and that is after investing $763,000 in R&D. On the right-hand side, we can see the results of the retail innovation division, which we sold something like 103,000 US dollars, but we couldn't write it as revenues. They were written as reduction of R&D expenses. And of course, the new division is mainly an R&D business. So you can see heavy investment in R&D, 1.7 million US dollars. And the EBIT contribution is, of course, negative because it's still an R&D business. Altogether, the company, if we put aside the heavy R&D, is profitable and is going steady and growing moderate as we used to in previous years. We will go now through the main business of the core traditional part of the company, and as you can see, we're active on the healthcare side of the company on two sections. The OEM section is we're selling weighing technology to blue chip companies like GE Healthcare and Atom, which is a Japanese company. And they're implementing our weighing technology into baby incubators and warmers. This business has been going on for the past 8 or 9 years. It's a one-off payment deal with OEM companies, and we're dependent on their market. If they grow their business, then we grow ours. We're not marketing ourselves on this side of the business. The other side of the healthcare business is a small line of branded products that we have of our own, which are mainly for the hospitals, nursery homes, elderly homes, and they're sold through distributors. We've got 11 distributors all over the world. One of them is here in Australia, Newcastle, and they each sell a couple of hundred US thousand a year. The other section of our core traditional business is, of course, the retail section, in which we sell our weighing technology to the integrators of the self-checkout. And as you can see, if you see the machines of Toshiba, Fujitsu, or Diebel Nixdorf, that is their self-checkout, and our weighing technology is implemented in there to the security scale. This is also a model of one-time payment that we get for our device. And over here too, we're dependent on their growth to grow our business. As we all know, the self-checkout business is growing in the world, and that is how we can see a moderate growth in our business on this. These two slides concluded the main traditional business that we've been to for the past years. And if we go on to the next slide, Donnie will explain you some new innovation business that we're doing on this self-checkout.
So yeah, happy to join in. We actually had Guy Moshe, the company CTO, with us the whole week, which is not here with us. So I'm happy to take his place. Not that I could do as good a job as he does. Really some new developments that the company has been invested in, especially through the retail division. One is an announcement about Edgify, a cooperation with a UK company, which is quite exciting. Basically, the ability to recognize fruits and vegetables on a self-checkout. So as most of us know, is you go to the self-checkout in most retail, you spend most of the time checking fruits and vegetables, and you have to choose them, and you have to decide whether it's a regular bananas or organic bananas, and the whole decision around the self-checkout takes a long time. That's exactly what Edgify invested in through optics and image understanding, to really understand that we're looking at Royal Gala apples and not a Pink Lady apples, and offer this immediately as a visual to the consumer, thus reducing the time that we are interfacing with the self-checkout, but also giving the retail the opportunity to reduce the time that we're consuming using these machines and the real estate that it takes. So that's really an exciting development that we're looking to bring to market within the next few months. And the other development is what we call the fast track in this respect, is really a new software that can put additional confidence and verification of the products that we scan on the self-checkout. So when we scan a pasta and we put it on the security scale, sometimes there's problems and false calls. That's a problem that caused a lot of grievances to consumers, and that's the software that we're looking to bring to market. Both are going to be marketed in a SaaS model, and that's a new exciting product that we're planning to bring to market. A little bit about the new retail division. Obviously, looking at a market which is substantially growing and ripe for innovation, when retailers are facing different disruption technologies and online purchasing, and they're all looking to automate their process and to move into more autonomous play. Just in quick, what we do on the technology side is basically allowing the retail to understand what happens on the shelf in a real time, on a very high resolution, on less than 2 square centimeter and a 1 gram resolution, effectively allowing them to know anything that moves on the shelves. And maybe a bit of a roadmap of how we got here is that we started by developing the technology itself, which is called the product aware technology. We then implemented into what we call a smart bay, the ability to allow retail to really understand what's on every shelf. In order not to depend only on the time that it takes retail to make decisions, we decided to produce our own technology based on this, which is commercialized on the Innovendi, an exciting new vending concept by which consumers just interfaced with the vending machine through opening a fridge door, if you will, something that resulted in a lot more volume of products running through the machine. And like we said, we saw in Israel an immediate deployment in offices and train stations and hospitals and universities of these machines, and we see stronger and stronger demand for this concept. If you recall, 6 months ago, we announced cooperation with a company called Medix in the US. It's a shelf manufacturer. And as they went to market with our solution, they actually saw a demand for a like Innovendi machine, but without a fridge. That brought the development of the sorter, which is practically a machine the same as Innovendi, but allowing us to put a non-chilled product. From looking at some activities that happened just in the last few months by Australian retailers visiting Israel, there's definitely an interesting application for the sorter even in Australia. And what we see on the right-hand side of the slide is basically where the company is heading in terms of our future development, and that's the major announcement that the company just made yesterday with cooperation with Hitachi, and that's for the capsule. That's basically the first autonomous store, completely autonomous store, A to Z solution that Shekel and Hitachi are going to bring to market. It's a major cooperation which involves both the development, the co-development, but also the co-marketing of this unique concept, by which shoppers could just walk into a confined space of 20 square meter, take whatever they want and just walk. And then Hitachi will be the one responsible for providing the tracking of the consumers, and Shekel is going to bring the tracking of the products. So that's quite an exciting news, and we are really hoping to be able to bring this to market in 2020 and show a different change of the way people shop today.
Okay, perfect. Thank you both. So we'll now, after this overview, we'll open up to some pre-submitted questions that we received. And the first one is on the Innovendi deal. And it's how is the deal progressing with the Tnuva on the Innovendi machines? So I'll pass on to you, Barak.
Okay, so Tnuva has signed an agreement, a commitment to buy 1,200 machines in the course of 7 years with a minimum of 100 per year. We've implemented 56 machines in Israel so far, and we should implement 15 a month on October, November, December, concluding to 100 machines for this year. Tnuva is talking about ordering some for the next year, but we don't know exactly if it's going to be the minimum 100 or more. Besides that, we should have an order from UK of a few tens of machines for this year, and so it looks though the technology is progressing, and the going to market is progressing, and we feel good about this.
Okay, we've got one on financials on whether full year 19 results will be in line with full year 18 results. So I'll pass it on to you again, Barak.
Well, first of all, we're used to have a second half of the year better than the first half of the year. It's been like this for the past 6 years. So it looks like we're going to reach the results of 2018. We see some nice orders from our big customers like Toshiba, Diebold Nixdorf, Rice Lake that are larger than last year. And that also gives us the confidence that we're on the right way. Taking in mind that we are going to see some revenues from the new retail division on the second half of the year, gives us more confidence that we'll reach at least the results of last year.
Mm-hmm. Okay. And then we received a question on Shekel scales, and actually on the retail self-checkout and on the agreement on Edgify. How is the agreement with Edgify progressing?
We are starting a pilot in a live store in Israel right after our holidays at the end of October. Besides that, we are talking to our current retail customers, the integrators, both Toshiba and Diebold Nixdorf. We are talking to them on the system, showing them what the system can do. And unlike the past, we are actually talking on the system with retailers themselves, not only with the integrators. Having said that, it's too early to say when this will be commercialized. We're doing all we can on the R&D, as I told you, but it's too early to say when.
Okay. Another question received is, in light of the recent collaboration with Hitachi, how do you see Shekel participate in the global autonomous retail space?
So yeah, it's really exciting, and if you read the announcement, you see the depth of the collaboration between the two companies. We're obviously very pleased that Hitachi chose Shekel out of many choices to collaborate with. And I think that that's where the industry is going. We were always under the opinion that it will be very difficult to reach a completely autonomous play on a 400 square meter shop. We still have the opinion that we're a few years away from there, and we think the process will be gradual. And by looking at a concept of a 20 square meter autonomous shop is the right direction in our view, and the gradual implementation of such a technology. And we are very pleased that, like we said, Hitachi chose us. We're going to enter a collaboration on the R&D side. We already have their sensors. We're already trialing them in Israel, and we're looking to bring this to market as early as 2020. So obviously a big achievement in terms of the confidence that we got for our capabilities, and obviously a power play in terms of the marketing capability that we'll enjoy with Hitachi.
This is a question that the company receives quite often. How is the Shekel technology superior to that of peers, for example, Amazon, and who are Shekel's main competitors?
Look, again, I think it's a market which is under development. There are many companies that participate in the development around the world. We think that there's going to be many developments in the next few years. So it's hard to see, exactly where the market will land, but it's definitely an exciting area to be in, and everybody's trying to bring solutions to this market. And we don't think that Shekel is going to be 100% of anything in this business. But we are the only one that are basing our technology and solutions on really strong understanding of weight, and we are the only one that's combining a strong artificial intelligence with this. And the combination of a hardware-based core capability with a very strong mathematics on the algorithmic side is something that gives us an edge that we think that it's going to be hard for people to reach. So whether it's going to be a fusion of sensors at the end and different type of capabilities mix, quite possibly, but we see our strength, especially at the weighing capability and the mathematics, and that's where we see the combination bring us to a leading place, as evident with the cooperation with Hitachi, but also with the nice invitation we received to sit with Intel and its group on the think tank for the future retail. So for many aspects, we think that where we are positioned today is in a leading position on the technology and solution.
Mm-hmm. A question on financials that we've received is, when do you expect to start generating revenues from the Retail Innovation Division, and when will this division become profitable? So I'll hand over to Barak again.
Well, we've seen some revenues from the Retail Innovation Division selling Innovendis on H1, but we couldn't write it on the report as revenues. It was written down as a reduction of R&D expenses. We know that the sales of the Innovendi on H2 this year will be written as revenues. So that'll be the first time we see revenues from the Retail Innovation Division. And as I said before, we've got some orders from out of Israel too, not only the Tnuva deal. Having said that, it's too early to know when this division will be a profitable division. We hope to get a bigger orders next year and generate more revenues, but it's too early to say when this division will be profitable.
Mm-hmm. A question on Sotter. You have developed a new product called Sotter together with Maddox. Can you tell us more about this?
Yes, again, I think in line of what we said before, it's just a market reaction to our presentations. It was basically Maddox, who is basically tasked to offer smart shelving, went to the market with it in the United States and spoke to different retailers, but at the same time presented Innovendi and they came back saying, look, we like the Innovendi, but we don't need it chilled. So it was basically a demand from the market that created the development of the sorter, and we see this as a very interesting product to use for different high value items and specific products. Without getting too much details, a very strong brand name from Australia visited Israel just 3 weeks ago. We saw them again last week, and they tend to sell products locked in keys. And the sorter was just the best solution to put them in such a device instead of lock them in keys. So we definitely see the demand for this product as a very real one, and especially on the DIY type shops.
Mm-hmm. A question, can you provide us with an update on the pilot of the Smart Bay with a large US retailer?
That's a question that we receive quite often, as it was in the prospectus, and I think that we understand the question coming from investors and the market. The only thing we can say at that point is that it is continued to be a pilot. It is continued to be a paid pilot. We are definitely perceived as a strong technology company, but we cannot tell more than this in terms of when it can go into commercialization, of what will involve all this. So from our perspective, we continue to provide this good technology to this retail, and it's a paid element, and everything that was in the prospectus is still correct and continuing, but we cannot report any commercial element from this.
Mm-hmm. I said, if there are any questions that you would like to ask, feel free to put them to type them into the chat box. We've got another one. Congratulations on opening your new office in Australia. Are you in any discussions with major retailers in the country?
Yes, indeed, exciting. Only in the last week, we met with 4 major retailers in Australia. 3 of them visited Israel. And while it took us some time to get there, we definitely think that the retailers in Australia are leading the pack in terms of their interest in technology and innovation. We see it across the board, the understanding that technology is important for autonomous operation and for consumer enjoyment of the process. So yeah, absolutely, we're happy about the ability to have an office here. We'll have the machines here very soon, the Innovendi and the smart shelving, so we'll be able to start real marketing, and we definitely see an interest for the products in Australia.
Mm-hmm. We've just received a live question that just has come in. Can you tell us what the expectation is on R&D spend, research and development spend, for 2020 and going forward? So I'll hand over to Barak.
Well, R&D expenses on H1 2019 was 2.4 million, divided into 1.7 million for the new division and 700,000 for the traditional business. We expect 2019 to end at 4.2 US, and we expect 2020 to be around the same. That should be the last year of heavy, massive R&D before all technologies could go to the market.
Mm-hmm. Okay, just checking if there are any more live questions. We've got one more question. Mm-hmm. Just 1 second, I'm checking. A question that we've just received. Why have you listed in Australia, and do you plan to move all your operations to Australia?
2 different questions. We'll deal with the first one first. There's no plan to move all of the operation to Australia. The R&D is heavy in Israel. On Shekel scales today, there are 100 employees in Israel and 60 in the factory in China. There are about 20 on the retail, so there's about 180 employees in Israel. So I don't think the company will move it to Australia tomorrow, although we're very happy to be here. On the ASX listing, it's really an interesting question. And few Israeli tech companies, there are 5,000 of them, but few think that listing and being public is good for their business, and Shekel absolutely thought so, especially in light of the blue chip companies that sold to and the new markets that we're going after. So going public was a strategic decision taken by the company. As some of you know, many Israelis are also listed on NASDAQ. But in order to be listed on NASDAQ, you really want to be a larger company in the range of $500 million company, and that's not the stage that we're at. So reviewing different exchanges around the world, the ASX was just an excellent fit in terms of the accounting rules, the language, the culture, if you will, and as well as the size of the business, somewhere between $50 to $200 million. You want to be in the exchange, and you still have a large room to grow. Important to know, there was good activity done by the ASX in Israel to tell the story of the exchange and how the companies can grow here. So we pretty much rode on the same wave, if you will, of 20 Israeli companies.
Okay. Another question that we've received is there a risk of further capital required for the new division, the Retail Innovation Division?
So as we saw in the presentation, at the end of H1, we have 5.1 million US in our bank. We're burning cash in H1, of course, because of the R&D, but even if we keep on burning cash at the same rate, we've got enough cash till the end of 2020. And we believe that on 2020, we'll burn less cash because of revenues coming from the retail innovation. But as I said, even if we keep on burning cash like this, we've got enough cash at the end of 2020, what we see is the end of the R&D era.
Mm-hmm. Okay, so in case anyone wants to submit another question, please feel free to submit it through the chat box. Otherwise, we've got, I'm just checking now. No, otherwise we've got one question left, which is, where do you see the company in 12 months' time, and what will be the company's key milestones to look forward to in the next 12 months?
Look, from the business aspect, I think the company is really delivering on its promises. If you look at our information and releases in the beginning of the year, we think that we're heading in the right directions in both divisions. So we still continue to see strong demand for the Scales division, and we see it adding a new product, which is a SaaS-based product like the Fast Track and Edgify to their mix. So we absolutely see that the Shekel Scale will continue to sell hardware, but also complemented with software-based solutions on a SaaS model, which is quite exciting from their perspective. And of course, the Retail Innovation Division, with its massive play into the autonomous and the Innovendi already receiving market reception, we plan to continue and see that the market receive it. From a go-to-market, what we're planning to do is a lot more marketing of the Innovendi and Sorter. So we are planning to do a lot more activities in this respect and to streamline production, especially in Eastern Europe. And that would take us further in terms of the revenue, while we focus on the capsule for the 2020 with the cooperation of Hitachi. So a few directions of the retail division, while we focus on the sales and marketing of the Innovendi, we still want to continue our development efforts. So that's where we see us in the next 12 months.
Mm-hmm. Okay, so it doesn't seem we have any more questions in the queue. So I'll just hand over to you both again for final remarks.
Again, exciting webinar, and thank you for all the questions, and Elodie and Georgia for arranging this. It's been absolutely a great and exciting week interacting with the market here, and we're happy to finish on a positive note. We even saw some strong uplift of the share in the last week, so that was good, and happy to have Barak here and Guy for portions of the week. So thank you all for joining us. We're looking for more exciting news in the coming months.
Thank you from my end too. Hope you'll keep supporting us, and we'll be in touch and updating every few months.
Okay, thank you all. And just to bear in mind, a recording of this webinar will be made available next week. Thank you.